So Doug, all right, let's get back to business.
Okay.
What's happened with the market in the last month since the debt ceiling standoff?
So not a whole lot. I mean, if you go back to the last presentation that we did, which was right around this time in September, you had the debt ceiling in the news. You had the beginnings of Fed tapering conversation. You had inflation worries. You had all these things that, for the most part, still exist today. But you were starting to enter that time frame where the market was showing a little bit of volatility, and it had been close to 200, a little more than 200 days since we had a 5% correction, which is an extremely long time in any type of volatility regime. But I think people were starting to get a little nervous, and they were saying, okay, here's the perfect setup for the market to truly have any kind of corrective action or even a significant sell-off. Well, sure enough, we got our 5% correction, and it came and went pretty much in the blink of an eye. If you look at the returns in front of you here, this goes back just 1 month, and we have all the major asset classes here covered. So let me pull out my laser pointer here real quick. There we go. So in the top here, we have green representing the value factor ETF, or value as a whole. Right below that, we have the Russell 2000, which represents small caps. Then we have orange, which is just the broad market. You have international here, and then you have growth here at the bottom. But the main takeaway here is for all of the things that everyone was worried about, and granted, I think there were a lot of concerns that were worthy of people's attention, and I still think those things exist. Here we are with a 1 month return in the market being pretty positive across the board. So I know a lot of people are kind of looking at this market and shaking their head and saying, this can't keep going on like this. There's got to be something down the road that's going to happen. There might be, but for the time being, the market remains strong, and the returns are certainly backing that up for the time being.